Good evening. This is the Post-Market Recap by AGI Era. Today is Thursday, January 15th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a nuanced battle, with the broader market pushing higher on robust economic data, yet showing underlying rotations. The S&P 500 finished the day up 0.26 cents, settling at 6944.47. Technically, the index managed to hold above its psychological 6,900 level, showing resilience, but the advance was not without some internal shifts. The Nasdaq 100 also moved higher, closing 0.32%, up at 225547.074, indicating continued, albeit measured, strength in the tech-heavy names. The Dow Jones Industrial Average finished up by 292.81 points, closing at 4,942.44, demonstrating broad market participation in today's gains. Crucially, trading volume today was solid, with the S&P 500 seeing over 2.3 billion shares traded. This implies that today's upward move had a decent level of conviction, suggesting genuine buying interest rather than a mere technical bounce on thin volume. Market breadth sentiment. Under the surface, the fear gauge, or VIX, is trading at 15.83, marking a 2.92% increase from yesterday's close. Despite the market's positive close, this uptick in the VIX suggests that while the indices moved higher, there's a subtle undercurrent of increasing caution or hedging activity among investors. It's not a panic spike, but a clear signal that complacency might be waning. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities, XLU, which gained 1.02%, while technology, XLK, despite the Nasdaq's rise, only advanced 0.48%. The spread between utilities and technology today tells us that investors are favoring safety and defensive plays even as the broader market inches higher. This rotation indicates that Wall Street is positioning for a potentially more cautious outlook, perhaps anticipating a moderation in growth or seeking stability amidst macro uncertainties. The macro engine room. The primary driver of today's moves can be traced back to a flurry of stronger-than-expected economic data. The 10-year Treasury yield settled at 4.18%, moving higher on the day. This move is significant because it reflects renewed expectations for a resilient economy, potentially pushing back the timeline for aggressive Federal Reserve rate cuts. Stronger data, including an unexpected fall in weekly U.S. jobless claims and surging manufacturing indices from the Philadelphia NY Empire State Fed reports, fueled this bond market reaction. Higher yields directly create a headwind for growth-oriented sectors and companies with high debt loads, as borrowing costs increase and future earnings are discounted more heavily. Conversely, this can be a tailwind for financials. Meanwhile, the U.S. dollar index is up 0.27%, trading at 99.18, strengthening on the back of the robust economic data and rising yields, as a stronger economy typically attracts capital. Crude oil is trading around 59.26, responding to a 2.62% drop on the day, likely influenced by global demand concerns or an unexpected dip in natural gas storage that was less than anticipated, but potentially signaling a broader energy market rebalancing. The AI and Tech Monitor? Turning to the leaders of this market, artificial intelligence and big tech. Nvidia finished the day up 2.1% at 186.99, continuing its impressive run and underscoring the persistent investor appetite for AI-related plays. However, not all Mag 7 names participated equally. Microsoft closed down 0.59%, while Apple also saw a slight decline, closing down 0.67%. Alphabet Google was down 0.91%, and Tesla edged down 0.14%. On the other hand, Amazon closed 0.66%, and Meta gained 0.86%. The mixed performance in this group is notable. While Nvidia's strength highlights the ongoing AI narrative, the slight weakness in other tech giants like Microsoft, Apple, and Alphabet, especially on a day with rising yields, suggests that investors might be becoming more discerning. This could be profit-taking or a rotation out of some of the broader tech names into more defensive sectors, as indicated by the strong performance of utilities. After hours and look ahead. Looking at the after hours tape right now, shares of Textron Inc. are moving significantly, up over 0.2% in extended trading, indicating some positive sentiment or news emerging post-market. As we pivot to tomorrow, the calendar brings us no major economic reports scheduled for Friday, January 16th. Investors should specifically watch how the market digests today's strong economic data and the implications for the Federal Reserve's monetary policy path. The bond market's reaction, particularly the 10-year yield, will remain a key metric to monitor for its continued influence on equity valuations and sector rotations. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer. This podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.